So, what is operating segment? According to MFRS 8 paragraph 5, an operating segment is defined as a component of an entity that engages business activities from which may earn revenue and account expenses. The result of the activities are regularly reviewed by the entity Chief Operation Decision Maker (CODM) to make decisions regarding the allocation of resources and to assess the segment performance. In addition, separate financial information must be available for that segment. An operating segment can exist even if it has not yet generated revenue. For instance, a startup division that is still in its early stage of operation may already qualify as an operating segment. However, not every part of entity is necessarily an operating segment. For example, a research and development department (R&D) will not be considered unless it carries out business activity such as treasury function at the head of office and earn interest income. Next is CODM. The Chief Operating Decision Maker refers to a function rather than a specific person. This function is responsible for allocating resources and evaluating the performance of an entity operating segment. The CODM may differ between entities. It could be the Chief Executive Officer, Senior Management Team, and Board of Directors. The specific title of person or group is not important. What matters is that they are responsible for making strategic decisions about entity segment. For example, in Nestle Malaysia, the CODM is the Group Executive Board, which includes the CEO, Joan Arnolds, and the Chief Financial Officer, Syed Saiful Islam. Same goes in Top Glove Corporation. The Managing Director, Lim Cheong Guan, serve at the CODM.
Now, I want to present for question 3 from part A, which is the types of segmental report used in financial reporting for Nestle Malaysia Berhad and Top Glove Corporation Berhad. The types of segmental report used by Nestle Malaysia Berhad is business segment report. According to MFRS 8, a business segment is a component of an entity that engages in providing a group of related products and services that are subject to risk and return different from those of other business segments. It can help users see which division or product lines contribute more to the company's revenue and profit. Some factors that need to be considered include the nature of product and services, production process, and regulatory environment. For Nestle, the company divides its operation into two main segments, which is food and beverage and others, which include nutrition, Nestle Health Science, and Nespresso. So, this is the snippet from Nestle Malaysia Berhad segmental report for the financial year ended 30 June 2025. Nestle recorded about 2,736,327 in revenue from food and beverage and 700,328 from the other segment. And the total for the revenue segment is 3,436,655 ringgit. So, this report shows how each product group performs and which area contributes more to the company's overall profit. Next, we move to the second company, Top Glove Corporation Berhad. The types of segmental report used by Top Glove Corporation Berhad is geographical segment report. The segment is focused to a part of the company that operates in a specific country or region and faces different economic risks and returns compared to other areas. When identifying geographical segments, companies consider factors such as location of operations, economic environment, and exchange rate exposure. Here is the snippet from Top Glove Corporation Berhad segmental reports for the financial year ended 31st August 2025. As shown, the sales from external revenue by Malaysia, Thailand, Vietnam, and others. We can see that Malaysia recorded the highest revenue of about 3,060,713 ringgit, while the other countries contributed smaller amounts. And the total for external sales is 3,489,415 ringgit. In conclusion, the geographical segment helps users understand a company's performance in different locations.
I want to present about the threshold for reportable segment. 10%, one that meets any one the following quantity threshold. First, revenue. Each response revenue from sale to external customer and inter-segment sale is 10% or more of the combined revenue of all operating segments. Second, result or profit, the absolute amount of the segment reported profit or loss 10% or more of the greater of the combined reported profit of all segment reporting profit, or the combined loss of all the segment reporting losses. Lastly, asset. The segment asset are 10% or more of the total asset of all operating segment. Next, 75 rule. After determining the reportable segment, the entity should ensure that the total external revenue attributable to those reportable segment is at least 75% of the entity total revenue. If not met, additional reportable segment should be identified until at least 75% of the entity total external revenue is included in its reportable segment. Next, the answer for part A, question 4. Two key benefits of segmental reporting. First, better insight into internal performance and risk. Instant that only viewing an aggregate consolidated statistic. Segmental reporting allows consumers to observe how many company components perform. This makes it easier to determine which business units are generating profit or losses and which are performing poorly or creating a greater risk. Second, enhance comparability and capital allocation transparency. User may determine where management is prioritizing growth and whether that align with the segment profitability by looking at how resources, asset, capital expenditure are distributed across segments. This is the operating segment from Nestle Malaysia and Top Glove Corporation Berhad.
Next, I want to present for question 1 from part B, which is to give an explanation on MFRS 134. MFRS 134 set out the requirement for preparing and presenting interim financial reports such as quarterly or half-yearly reports. This report must include a condensed statement of financial position, profit or loss, cash flows, and changes in equity, together with selected explanatory notes. It is to enhance transparency and comparability by providing up-to-date financial information, and it helps users assess the company's performance, financial position, and liquidity during the year. Thank you to Elisa. Next, we move on to part B, question 2. Under MFRS 134, interim financial reporting, a significant event or transaction refers to any event or activity that occurs after the end of the last annual reporting period which has a material impact on the company's financial position, performance, or cash flow. These events must be disclosed in interim reports to help users understand how the company's financial condition has changed since the last annual report. There are two significant events of Top Glove Corporation Berhad. The first significant event for Top Glove Corporation Berhad is the issuance of senior sukuk and the redemption of perpetual sukuk. On 20 February 2025, Top Glove subsidiary TG Treasury Berhad issued a 5-year senior sukuk wakalah worth 800 million with a profit rate of 4.22% per year. This sukuk helps the company raise funds for its operations and future business growth. On 27 February 2025, another subsidiary, TJ Excellence Berhad, redeemed and cancelled a perpetual sukuk worth 1.18 billion, which means the company repaid and removed that debt. Both transactions are significant because they show how Top Glove is managing its financial wisely. By issuing a new sukuk while reducing all debt, the issuance increases cash and liabilities while the redemption reduces liabilities and finance costs, making the company's financial position stronger and more stable. This is stated in the notes to the interim financial statements, Note 6, C and D, also in Statement of Cash Flow. The second significant event for Top Glove is its strategic expansion through a joint venture. On 21 July 2025, the company, through one of its subsidiaries, acquired a 30% shares in Nephro TGD Kersadiran Berhad, a new joint venture formed to operate a dialysis center. This means that Top Glove is now partnering with another company to run a healthcare service business. This event is significant because it shows a new direction for Top Glove. The company is well known for making gloves, but by investing in a dialysis center, it is expanding into the healthcare service sector. This move shows that Top Glove wants to grow its business and not depend only on glove sales, which can change depending on the market demand. It also shows that Top Glove is using its experience in the healthcare field to explore new opportunities. Through this joint venture, Top Glove can build a new source of stable income and improve its long-term profits in the future. Overall, this joint venture shows that Top Glove is forward-looking and finding new ways to strengthen and expand its business beyond just glove production. This is stated in the notes to the interim financial statements, Note 11, changes in composition of the group. Before we go to the last question, which is question 3, I would like to talk about 4 types of interim reports. According to MFRS 134, interim financial reporting, companies must show their current interim period and also comparative figures from the same period in the previous year. The first quarter covers the period from 1 January to 31 March. The second quarter is from 1 April to 30 June. The third quarter is from 1 July to 30 September. And lastly, the fourth quarter runs from 1 October to 31 December. These quarterly reports help investors and other users see how well the company is doing during the year instead of waiting until the end. It gives a clearer picture of the company's progress and financial health throughout the year. Next, the interim reporting periods for both the current and comparative interim financial statements prepared by Top Glove Corporation Berhad. For Top Glove, the statement of financial position is prepared as at 31 August 2025 with comparative figures as at 31 August 2024. The statement of profit or loss and other comprehensive income shows the gross revenue and expenses for the fourth quarter and for the whole year up to 31 August 2025. It also includes comparative results from the same periods in 2024. For the statement of changes in equity covers the 12 months ended 31 August 2025, compared with the same 12 months in 2024. For the statement of cash flows is prepared for the 12 months ended 31 August 2025 compared with the same period in 2024. That's all from us. Thank you.